Our mission here at C2 is to support you as a loan officer and give you everything you need to give the most efficient, best possible service to your clients, to your borrowers. So please be sure to meet me and our entire team. Before we get going, let's do a little bit of housekeeping. Again, morning sessions are loan originator education, and this is not oriented to forward loan officers. This is oriented to reverse loan officers who have committed to reverse, to make it part of their income stream, to serve their senior clients. The afternoon sessions will be for financial planners and our loan officers, and it's a lunch and learn. And when you come back, grab your box lunch and come back in. If you do not have a financial planner, please vacate your seat for a while so we have enough room for all the financial planners and their loan officers first. If you do not have a financial planner with you, and I'll remind you of that after lunch. If you would please silence your cell phones. In fact, let's make sure everybody does that. We're good. All right. And then the restrooms are out the door to the head of the steps and take a left. Okay, so that's the housekeeping. So we've got a really good roster of speakers today. And I want to first of all, thank TMAC. If you take a look at the back, the TMAC crew standing in the back. They are our sponsors for today, and our excellent AE is Nathan Grant. And what color is that shirt, Nathan?
I think it's red.
So TMAC is our sponsor today, and truly they made this all possible to get this beautiful room, this beautiful venue, get our top-notch, nationally known speakers here. So thank you, TMAC. Additionally, we have our entire C2 Reverse crew here. Shane Irwin, our National Director for C2 Reverse. And we have the best support team we've ever had at C2 Reverse. So they're standing right here. We have Michelle Young, wave. She's our training admin. Vanessa Gamboa, our processor, and then Melissa Clymer. Okay, we want to do a couple of testimonials for our in-house processing. We got really good feedback yesterday. So if you'd grab Shane and let him know that you'd like to do, it'll be a 30-second testimonial for our in-house processing. Really appreciate that. It'll probably get you little perks as your files go through too. All right. And I want to take a quick moment and remember Ron Temko. The reverse division was Ron's conception to begin with. And I really appreciate Ron's friendship and support in helping me bring the C2 reverse division to life. So really, Ron's one of the most important people in my career, and really thank you for that. And appreciate Linda Temko and David for their ongoing support, helping me build the reverse division really to what it is today. So as I think about our roster of speakers today, excuse me, that was hard. As I think about our roster of speakers today, my thoughts revolve around passion and purpose. Each one of our speakers had an experience for them that created passion for reverse. From that passion, they found a purpose that really altered their careers, altered their lives, and really enhanced the lives of so many people in the industry and that they serve. And through that purpose, they have all become nationally known experts, which is why they're with us today. And so we're glad to have Dr. Wade Pfau, Dan Hulquist, Tane Cade, who's now with C2, formerly president of Fairway Reverse, now with C2, and Shane Irwin, our national director. And you'll hear from them all shortly. But speaking about passion and purpose, my passion from reverse came from just another call from a repeat client, looking for a loan. I think my folks need a reverse. Can you help them with that? Well, this repeat client was a commercial loan officer for a regional bank, totally knows what he's doing. At that point, this is 15 years ago, I'd been in mortgage business for 25 years. I could do anything, right? So sure, I can help your folks with a reverse mortgage. And it's really the tale of two outcomes. One was I had so much anxiety going through that because I didn't know what the hell I was doing. But, like the duck swimming in water, I was smooth on the surface. Got the deal closed, finally. And it was the right structure, perfect fit. It had more of a positive impact on that family than any loan I'd worked on in my last 25 years. That one loan sparked my passion for reverse. I resolved to become a reverse mortgage expert. And through that resolve, that purpose, I became the top producer for C2 for reverse mortgages. Then in 2016, I had the opportunity to step in and run the reverse division. And now I had a new purpose. I didn't want any other loan officer to go through that level of anxiety I went through on my first reverse. And that was the nexus of the C2 reverse training, certification, and origination program. And as a result of working on that program, I was drafted to be on the NRMLA Board of Directors and the NRMLA Education Committee. So this has been really a career-altering path for my life, and it is my passion, truly. So the purpose and passion. And I'm hoping that you guys get your passion today, okay? Because that's how our experts got there. Now, speaking of experts, if you're C2 reverse certified, raise your hand. All right, excellent. If you are a certified reverse mortgage professional, please stand. All right, be sure to interact and talk with our CRMPs here today, and I want to call out specifically Troy Martin. Troy, stand back up. Troy just passed the CRMP exam last week. Congratulations. So, Michelle Young, where are you at?
She's out front.
Oh, she's supposed to stay here. Okay. If you are not C2 reverse certified, talk to Michelle Young, okay? She's our training admin. She'll set you up. It's online, on-demand, self-paced, self-study, no cost to you. If you are C2 reverse certified, but rusty, we have a recertification course. It's designed to be something you can do on a Saturday, kind of grease the wheels, get your mind back into it again. Again, talk to Michelle Young, our trainee admin. She'll sign you up for it. It's no cost. If you have 3 years of experience in reverse, and I know there's a number of you out there that do, and you'd like to become a CRMP, contact me. I'll mentor you into the accreditation. There's only 204 nationwide. We have 23 here at C2. That's about 10% of the national total. I've mentored more than 15% of all CRMPs into their designation. I'll be glad to help you, and it's a life-changing experience. So the key requirement is 3 years experience in reverse. If you want to brainstorm that opportunity, give me a call next week. Don't call me tomorrow. Shane, Tane, and I are golfing. All right. We'll need it. So our first guest speaker today is Dan Hulquist with how to get a handle on your reverse mortgage business. So Dan's passion story started at the beginning of the crash, 2007, 8 in there. Who knew good things would come out of the crash? So Dan was a loan originator. None of his realtors were selling. None of his builders were building. So to keep the cash flow going, Dan got into doing counseling, helping people get loan mods. And so he's in doing his counseling one night, dealing with a older veteran with a ton of equity, and is not getting anywhere with a lender. And at one point, he literally yells out, if you know Danny's passionate, he yells out, why won't this lender help this man? And one of the other counselors kind of quietly says to Dan, well, how old is he? Dan says 65. The other counselor says, let's give him a HECM counseling session. So Dan's career changed that night when he heard that HECM counseling session and saw the relief that a HECM could bring to that 65-year-old veteran, who then could age comfortably in place. So that night really ignited Dan's passion, and his purpose became becoming an educator, a speaker, and an advocate for reverse. And I think you all know Dan pretty well because he's an old friend of mine, an old friend of C2's, and he's in the 10th version of his book, Understanding Reverse, which he updates every year, and there's a lot of updates in the 2024 version of Understanding Reverse, and it's really the handbook for the industry used by loan officers, financial planners, realtors, and even other countries in structuring their reverse mortgage business. And if you have Understanding Reverse, it's not a novel, it's a reference book. You don't need to read it front to back. Just go through the table of contents and pick out the order you want to read it in. Dan's a real wordsmith. Very simple explanations for complex topics. And I know as you read the book, you'll read things he said, I've heard Scott say that, because I borrowed the verbiage from Dan. Thank you, Dan. And then Dan just released his new book, which you have in front of you, and that's for you to take home with you, and that's Navigating Reverse. And while Understanding Reverse is really oriented to loan officers or prospects or financial planners to obviously understand reverse, Navigating Reverse is really for borrowers, their spouses, their heirs, their financial advisors, for people who already have a reverse, to help them navigate the possible pitfalls of a reverse. And that's what Navigating Reverse is intended for. Then Dan also developed the software program for your phone, Rapid Reverse, which is designed to help you run numbers on the fly, wherever you are on reverse mortgages. Now you can get all the information available from Dan at understandingreverse.com. He is truly an icon in the industry. Proud to have him as a friend of mine and friend of C2. And with that, welcome Dan.
Testing. All right, we're live. Thanks for the invite, guys. I'm going to bring my phone because I think I want a selfie with this group. This is probably the most highly concentrated, educated group of reverse mortgage professionals in the country that I've ever spoken to. So I'm really excited about this presentation. In fact, for those of you who know me, I am very deliberate in the way I write. I'm very deliberate in the way I speak. But the first thing I'm going to do is I'm going to go off script. Oops, one more slide. I'm going to go off script with you guys. Because I've asked this question many times before in sessions like this, and I never really got the response that I wanted. So I'm going to ask a very directed question. Who here is willing to raise their hand that they either already have a reverse mortgage or are going to consider one when they were age and equity eligible? Who is? Okay, that is fantastic. Keep your hands up because I want to see this again. All right, everybody with your hands up. Ready? And go. All right.
So Dan, I actually have 3 loans in process right now for C2 reverse loan officers for their own reverse.
Yes.
What we see is C2 reverse loan officers tend to get a reverse as soon as their age and equity eligible. And it's
It's true.
And I think Scott has a lot to do with that, because the moment I met Scott, was it probably 10, 11, 12 years ago, I met Scott. He has been a champion of reverse mortgage education from the moment we started. That's unusual in this space. Now, let me tell you a story about the last time I asked that question. I was asked last minute to speak at the MBA conference in Nashville in November of 2022, I believe it was. They called me up actually about a week before the conference and said, hey, we have a cancellation. Can you talk about reverse? And I said, well, yeah, I'll drive to Nashville. So I drove to Nashville and I said, listen, I'm going to speak very boldly about reverse mortgages, and I'm not going to be apologetic about it, because I don't think this crowd actually understands what I'm talking about. So I said, who here is willing to raise your hand? Same question. Packed room at MBA's annual conference, standing room only, and one hand went up. It was an account executive, some of you probably know her, but it was an account executive in the reverse mortgage space. And I said, no, wait a second. I'm holding my hand up, and your account executive is holding her hand up, and nobody else is? There's a problem here. There is a disconnect between the product and what you think about the product. That disconnect is huge. There's a huge chasm within the mortgage space. That's not true in this room. I've never seen more than maybe 5 or 6 people actually raise their hand. And I would say most everybody in this room did. So congratulations, and I really think Scott has a lot to do with that. Thank you. All right, so we're going to review what's happening in 2024 right now. We have a growing market for reverse mortgages. You guys have all heard the stats. 10,000, right? 10,000 people every day turning 62. Who knows what peak 65 is? Peak 65? Yeah, it's going to be pushing 12,000 people will turn 65 in one day this year, and we don't know exactly what day that will be. 12,000 people in one day? It's going to continue for a few weeks because we know what the bulge in the baby boomer is going through that age 65 category. Now, that's very important, not just for reverse mortgages. Okay, our average client is what, 73, 74 right now? Okay, that means that we have a wave of business coming for years. When are they going to need home care? In their 80s. They're not even close to that yet. So we have a growing market. Peak 65 is coming up within the next couple months, which means they're going to be filing for Medicare, right? They'll be eligible for Medicare. Interest rates, yeah, I didn't really want to bring this up because when I put this slide together, it's a little bit lower. Yeah, interest rates have actually gone back up. But interest rates, we have a huge advantage now that we didn't before. Where are my TMAC people? TMAC has an optimal rate lock process, right? Okay? Optimal rate lock is huge for you guys because any fluctuation in rate between the time you take the application and the time you close the loan, you're going to get the best rate. Okay? You're going to get the best rate, which is not necessarily the lower rate. That's not a conversation we want to go into right now, but let me give you an example. December 5th, rates were almost identical to what they are today. If you took an application on December 5th and you closed it today, you would get virtually no benefit by any rate reduction closing today. But with the optimal rate lock, a $1 million home would experience a $33,000 gain in principal limit because rates dipped in January and came back up. Does that make sense? Okay, so we have advantages now that we didn't have before. HECM limits, you think that's a pretty big deal for you in California? 1.149 million? That's a great improvement. We have a lot of regulatory changes going on right now in the reverse mortgage space. We got 6% seller contributions. Yeah? Okay. So our lobbyists in DC are slowly making progress. We've been asking for that for 20 years. Okay, we wanted a HECM for Purchase program. We got that in 2008. Since 2008, we wanted seller contributions or builder contributions, and now we've been authorized to do 6%. That's great. We have some other regulatory changes moving in our favor. Ginnie Mae securitization is changing, right, which is going to help out our investors. So as a result, I hope premiums will actually increase as a result, but we have some regulatory changes on the back end that are going to help our investors. I could go on and on. Cash for keys. Let's talk about cash for keys for a moment. Cash for keys started in 2017, but it didn't apply to the older book of business. Well, what's happened to property values since 2017? straight through the roof. So we haven't seen anybody take advantage of cash for keys. On March 25th of this year, we can offer cash for keys for a deed in lieu of foreclosure, a short sale, or a post-foreclosure eviction of someone still living in the home of $7,500 plus probate costs. That's huge. That's good for our reputation. Lots of regulatory things are positive right now. But at the same time, our conversion rates are at an all-time low. There's a lot of things we can't do to control rates, right? There's nothing we can do about rates, and obviously principal limits are down, and it's tougher right now, there's no doubt. But why would conversion rates be so low? I think we can fix that. So today I'm actually going to talk about 6 ways that we can actually help you improve your business for 2024. You guys are experts. You're CRMPs, you're C2 certified. I'm hoping you're going to pick up just a couple nuggets. The first thing we're going to talk about is handling your communication. Handling your communication. I want to get some interaction with the group. Do you know when the 3 times in your life of your loan when you're most likely to lose it? Anybody want to tell me when you're going to lose a loan to a competitor? What's that? When rates change? That's actually, that's one of them, yes? One is the day of counseling. Has anybody had a counselor ruin your deal? Do you call your client 90 minutes after the counseling started? I would suggest you start doing that. They're going to create some doubt. Okay, so how you communicate and when you communicate will save you deals in 2024. Okay, my counseling session is at 2 o'clock on Wednesday. Well, Mrs. Smith, I'm going to call you at 3:30 because I want to make sure I answer questions because I am the expert on this program, not your counselor. Okay, the counseling process is required, but they're going to create doubt in your mind, and I want to make sure that I've corrected some of those misconceptions you might have after your counseling session. Does that make sense? You will lose a loan because when they have doubt in their mind, they're going to call a 1-800 number, and you're going to lose that loan. All right? Number 2, when the appraisal comes in, be very careful calling your client and telling them the value that came in on the appraisal until everything's finalized. I just saw somebody lose a deal because they didn't realize that a second appraisal was required. And you've already given the client good news, and now you're going to disappoint your client? We want to give our client good news, right? Okay, so what happens if the appraisal comes in low? How and when you communicate a low appraisal is critical for you saving that deal. So I would wait until the second appraisal is in, and then I would tell them that final figure. If it's a little lower than they expected, that's okay. The loan still works, right? In most cases, the loan still works. In fact, Mr. and Mrs. Smith, some of your costs just went down. It actually retains more equity in your home. You know, it's funny how some people complain that there's not enough equity left in their home, but then they want higher principal limits to take up their equity position. All right, so communicate properly when the appraisal comes in. Number 3, and you said rates, I think. Someone said rates. When rates go down, can you lose a deal? All day long. Because you may not have communicated the optimal rate lock process available with TMAC today. Make sure your client knows on a Tuesday, I would schedule time on Tuesdays, check and see what are rates doing. Rates went down, they're actually getting more money. Hey, Mrs. Smith, congratulations. I just wanted to let you know that rates have actually gone down since we took an application. We've unlocked and relocked your rate in Quantum, and you're actually getting an extra $3,500 now. Isn't that great? They will not shop you. Is that good? All right? All right, let's move on. Number 2, anybody have short to close loans? Yeah, all the time now, right? Okay, principal limits are lower. Sadly, at proposal stage or at application stage, I see so many loan originators that it's like a knee-jerk reaction. Oh, I'm just going to lower the lender margin. I'm going to reduce the origination fee. I'm going to offer a lender credit or broker credit. Can you do that and give them more money? Sure you can, but the appraisal's not in, and we don't know what the expected rate's going to be by the time they close. You might be doing that unnecessarily. Why would you hurt yourself? Right? We work hard for these loans. I know how hard it is. It's not easy to go back and forth to the kitchen table to try to talk to a client and their errors. Why would you go to 4, 5, and 6 when you haven't explored 1, 2, and 3? So for me, this is my list. You could structure it any way you want. Your list might be a little bit different. But my first question when someone says, hey, I'm $50,000 short to close, okay, is that a problem? Okay, we've already talked about your asset statements. Okay, it makes sense for you, even with the tax hit, to maybe go ahead and draw that money and eliminate that mortgage payment for the rest of your life. It's a cash flow play, right? It's all right if they're short to close. I had a loan originator tell me, yeah, I had 3 deals drop out because they were short to close. What? That's okay. People are short to close all the time. It doesn't mean the reverse mortgage doesn't work. I said, go back to them and start looking at the numbers and say, hey, is this a good value for you? A friend of mine that some of us know closed one the other day, $150,000 short to close, because mathematically it made sense for the client to wipe out that mortgage. Now, can the seller pay some of those costs? Yeah. For the first time ever, now 6% seller contributions, right? So that's huge. Strategic closing date or age up, can that make a difference? Yeah. Now, we don't have any underwriters, I think, from TMAC here today, so I can speak freely. I used to put in my file, under no circumstances are you going to close this loan before May 22nd. And I would have operations people hound me. You don't control our timing. Oh, yeah, I do, because I do what's in the best interest of the client. Now, we have a 120-day lock. That's another advantage I didn't mention earlier. We have a 120-day lock, and then we have a 120-day extension. What's going to happen in the next 240 days? Rates will drop at some point in the next 240 days, and they will age up so that they're 6 months from their next birthday. Can that eliminate a short-to-close loan? Oh, yeah, it can. The combination of the two? Yeah, you age up, you might get an extra $6,000, $7,000. But with the optimal rate lock, you might get an extra $33,000, like I explained earlier. All right, number 3, gift funds. TMAC has their gift funds guidelines. Just take a look at their guidelines. And can the kids jump in and help out? Yeah, mom and dad are short to close. You do it all the time, right, Rob? Yeah, talk about gift funds. Hey, mom and dad need this reverse mortgage. Can you guys chip in $25,000, $30,000, $40,000? Yeah, we'll do it. Because we want mom and dad to stay in their house, not with me, right? There's an incentive to come to closing with some gift funds, right? All right, let's move on. Okay, let's talk about somebody who's $50,000 short to close. This is an actual case. Current loan balance, about $200,000. Hey, they're paying a nice interest rate, 4%. Remaining term is 10 years. Their annual cash flow because of that mortgage was $24,658. Negative, right? Where are they getting that money from? Pulling it out from their retirement? Paying a tax hit? Okay, they're paying more taxes because, hey, I'm still making this mortgage payment. What's the break even? Just 2 years. Would you be willing to come to closing with 2 years of payments to wipe out any additional payments for the rest of your career or the rest of your time in the home? Would you be willing to do that? Sure. Okay, the numbers actually make this worthwhile. 50,000 short to close. We need you guys to sell those, right? Because we can't do anything about rates and principal limits. What we can do is react by giving them the information they need to make an educated decision. All right, I know I'm throwing a lot at you guys. Take some notes. You think this is a big deal in California? I'm sorry, guys. There's nothing we can do about this either. California, I know, insurance is a train wreck. And you need to make sure that you handle these issues up front. Talk about insurance. 44% of consumers don't compare multiple quotes. And I know that's a challenge here. But insurance is not just an issue in California. It's also Florida and the rest of the country. You need to make sure that you have those conversations about insurance early in the process. Encourage them to shop. Seniors are less likely to shop. They're more likely to stick it out. Why? Because they have their State Farm agent they've been with. I hope there's no State Farm people here today. They've had their State Farm agent for the last 30, 40 years. Why would I move to another agent? Because you're paying too much. Now, back in 2018, Forbes did a study on Geico and said, let's fact check Geico. Are they right? Yeah. In California, it's 20%. on average. So can 15% save you can 15 minutes save you 15% or more on your homeowner's policy? Oh yeah. Okay, California it's 20 below the median. So shop. Guys, if you're coming from the insurance world or you know people in the insurance world, you know everybody has a rating. Everybody has a rating with the insurance company that shows whether you're more or less likely to shop. If you're likely to shop, you'll get a better rate. Has anybody called their cable company lately? Yeah, try canceling that. Okay, you're going to get a spectacular deal for the next 12 months. And then you know what? You pick up the phone and you say, yeah, I'm going to cancel my cable bill again, right? It's not just cable. What about your cell phone provider? Okay, threaten to switch your cell phone provider. They don't want to lose you as a client. Shop. It makes a big difference when you shop for insurance. Here's another issue. Conversation I had with Wade not that long ago. Why do we have low deductibles for clients that have a $300,000 line of credit? That's lunacy. Why in the world would you have a $250 deductible? You can self-insure the first $10,000 with ease. That makes a pretty big difference in your premiums, doesn't it? Now, if we did an audit right now of every reverse mortgage client, you'd find that a lot of them have extremely low deductibles. Raise your deductible. Raise your deductible to the point where, okay, my insurance premiums went from $2,000 to $3,000 to $5,000 to $6,000 right now for an insurance premium. Raise your deductible. Self-insure. You've got the money. As my Canadian friends like to say, they have a saying up there in Canada, if your house is rich, you are too. It's brilliant, isn't it? That's kudos to the Equitable Bank, my friends up in Canada. If your house is rich, you are too. Why are you having a low deductible? The reason for a low deductible is because you're panicking that you can't cover a $250 charge. Don't do that. All right? Number 4, let's handle some inflated leases. Can you reduce a Lisa? All day long. It's actually not that hard to do. Anybody know what you can do to reduce a Lisa?
Lower the insurance.
Yeah, exactly, right? We just talked about it. See previous slide, right? Shop for lower insurance premiums, increase your homeowner's insurance deductible, apply for any and all tax exemptions. Notice I did not say tax deferral. You cannot apply for a HECM with a tax deferral. Can't do it. All right, but you can get tax exemptions and tax reductions. Do they even call? Have your clients call. Make sure you get into the habit of saying, hey, what's your tax right now? Have you applied for any and all tax exemptions available in your state or in your county or township? And then check that closing date again. Some of you may have probably heard this story in the past, but one of the first loans I closed way back when, the client was short to close by $1,500, and the woman actually sold personal items to raise enough money to close on the reverse mortgage because I had cut as far as I could go. I couldn't do anything else. So she sold personal items. In the process, we delayed her closing from Wednesday to Friday, and she aged up, and now she's getting $1,500. And she's crying her eyes out. And I'm thinking, this is a good thing, right? She goes, no, Dan, I actually sold things that I would have kept, personal items. She's crying her eyes out because I didn't do my job. It's one of the very first loans I ever closed. I'll never forget it. And that's why I tell underwriters, you will not close this loan until May 22nd when they age up and they get more money. Well, does that help you with a Lisa? Not always, but sometimes. Now, the problem with leases is they're based on actuarial data for life expectancy, and some ages round up to the nearest number and some round down. So in some ages, you're not going to get a benefit on your Lisa, but at least run the numbers. Change that closing date because you're going to get more principal limit, and your Lisa is going to shrink correspondingly because you're spreading it out over 13 years instead of 14 years. Okay. Tips and tricks. Hopefully you guys, yes, question?
Again, is that age up on the signing date?
Yeah, it's on the closing. Yeah, it's based on the closing date. Yes, the rounding up to the nearest age is the way they express it, I think, in quantum now. Nearest age, actually they list you actual age and nearest age side by side now in Quantum, which is great because then you can actually change the closing date until you see that change, right? Now you can kind of do the math in your head. And you're like, you back out their birth date 6 months and you're like, okay, I think it's like, January 15th, I think I can close and get them more money. So at least play with the numbers, but yes, it's based on the closing date. Good question. All right, more tips and tricks. All right, let's give you an example. You got a Lisa of $125,443. Okay, now I rounded the numbers. There's only 4 things you need to calculate a Lisa. I have a Lisa Quick Calc, by the way, so I can just plug in taxes, insurance, age, and expected rate, and boom, I have a Lisa pop up. So I ran the numbers and okay, that's $125,443. So for this client, I wanted to see, what's the sensitivity if I were to drop my taxes a little bit, drop my insurance, maybe raise my age, close within 6 months of the next birthday? What kind of difference does that make? And by the way, this is a 2.5 margin based on a couple weeks ago when I produced this slide. This client could drop their Lisa for $125,000 to $97,000. That's $28,000 difference because they got a tax exemption that dropped it from 6 to 5. Is that realistic? Yeah. They had their insurance. They shopped around for insurance and dropped it from $4,000 to $3,000. Is that possible? Yeah, in some cases. And they closed within 6 months of the next birthday, and boom, $28,000 extra in their line of credit. Yes?
How do you, what kind of tax exceptions are you referring to? Property taxes?
Yeah, property taxes, and there are some municipalities and townships that will also have some additional taxes that you can apply, and you just have to apply. Every one of them is a little bit different. Does anybody do that? Does anybody talk to them? I know Shane does. Yeah, good. Yeah, so every market is a little bit different for what you can do, but you know what? That would be a good idea to check with your local government office and find out what tax exemptions are available at specific ages or incomes. All right? Check and see what criteria is required. And then that's going to trigger in your mind the next time you have a client and you're thinking, yeah, that Lisa's a little too high. Let's see what we can do. They should be doing it anyway, right? Because especially with the Lisa, once you start, that sticks. You can't remove a Lisa without either closing the reverse mortgage or refinancing it. It sticks. So, good question. All right, let's move on to number 5. Let's handle some financial assessment issues. Financial assessment is a little tricky. First thing you want to do if it's a, we talk about willingness tests, we talk about capacity tests. I hate those terms. I hate the term willingness. That's a FHA term. Don't use it with a client. Don't say you haven't been willing to pay your bills. Right? That's demeaning. But make sure if they have a willingness test issue, which means they have credit history or property charge history issues, look for extenuating circumstances. It was frustrating to me that COVID was not an extenuating circumstance. Yeah, it's crazy, isn't it? But the results of COVID, okay, I had a family member die in Colorado, and now I have to fly out there and bury a loved one, and when you actually add up all the bills associated with burying a loved one, yeah, it actually was quite a bit of money, and it actually was a great explanation for why they were late on their bills the following month. Okay, that's an extenuating circumstance. We've seen some interesting cases where a dog needed surgery, or was it a cat needed surgery? Yeah, and you can't get your cat back unless you pay the bill, right? So could that be an extenuating circumstance? Yeah, if you can connect the dots. There's a 4-step criteria for using an extenuating circumstance. You have to be able to connect the dots. Heart attack's a great example. Had a heart attack in January, I missed some bills in February. That's ideal, right? Because you can show this is what happened to the client and this is the financial result. You can connect the dots. Obviously, the client can't be at fault, so if you've been betting on the Chargers, they're no longer here. I'll have to have another example. But no, if you've got a gambling addiction, yeah, that's the fault of the client, right? But there's a 4-step process. You want to make sure that all 4 are true at the same time in order to use an extenuating circumstance. Now, if it's a capacity issue, which means we have a residual income shortfall, then we're looking for compensating factors, which we'll talk about next. Also, if you see that there might be a LISA in the future or the need for a LISA, even if they don't need one technically from an underwriting standpoint, it would be best for the client to have a life expectancy set aside. We need you to sell it as a positive experience for the client. Now, I was that guy who had to listen to all the calls when the calls are recorded for quality assurance purposes. I got to get on the call, I got to listen to the recording and say, okay, that was stupid, you shouldn't say that next time, right? And the loan originator would say something like, hey, you missed some bills, and you can't be doing that, and so as a result, I've got to withhold a portion of your principal limit, set aside to pay your property charges, and I really wish you hadn't done that. Really? No, the conversation goes like this. You sit down, Mrs. Smith, I know things have been tough. I know it's been challenging, and it's been tough to pay those property charges. Would it give you peace of mind if we paid your property charges for you? And she smiles, and she says, you can do that for me? You can pay my property taxes? Well, yeah, it's going to come out from your principal limit, but would that give you peace of mind? She said, sure it would, because Bill always paid those bills, right? If you've got a spouse that always paid the tax bill and the insurance and handled the finances, take that responsibility away from her and give her peace of mind. So sell it as a positive experience, guys. There are people who should have a LISA, even though technically we don't require it. Does anybody have those clients? Yeah? Maybe a gambling addiction. Maybe they don't manage money very well. Maybe they don't budget properly. Maybe their kids are like, mom or dad have been scammed by a Nigerian prince twice at this point, and so maybe we should lock up enough money to pay their property taxes and insurance through their expected lifetime, and you're doing the family a service, right, by encouraging the LISA. So get a handle on selling financial assessment as a positive experience for the client and their family. Now, there are some cases where you just want to wait it out. You put it on the calendar and you say, yeah, you missed your property tax bill on this date. And you know what? I'm going to call you back in 4 months, and we want to go ahead and take an application at that time because, hey, make sure the property bills are paid, make sure your installment debt, revolving debt are paid, and in 4 months, we're going to go ahead and complete this reverse mortgage, and it's going to be spectacular, and here's what we're going to do. Put it on the schedule and just season it. 2 years. It's got to be 2 years for most items. All right. Let's roll on. Number 6, residual income shortfall. There are 8 compensating factors. We love compensating factors, right? And there's one that everybody loves, including TMAX underwriters, and that's HECM proceeds that can be dispersed as income if needed. That's dissipation of a line of credit. If you've got a $300,000, $400,000 line of credit, you can actually dissipate that as a form of income. Isn't that brilliant? Now, you can't use that as income up front, but you can use it as a compensating factor all day long. You have a non-borrowing spouse that works? Great. Use their income. There are 8, by the way. 4 of them you can't use unless you're within 20% of the residual income requirement, so just be careful. You can't stack them on top of each other to get to 5, 6, 7, and 8. But 5, 6, 7, and 8 are really good compensating factors because all it is checking a box. All right, number 2, you're going to find any and all assets to dissipate. I don't care how small they are. All you need to do is get a bank statement or a quarterly asset statement. Grab any and all assets that they have, and you're going to find they tend to add up, and now you can use that. Be careful discussing Social Security filing. That's not our job. I know some of you may be financial advisors. We probably have a couple in the room. But I tell people what strategy can possibly help them, but they need to seek the assistance of a professional before they go and file for Social Security based on my recommendation. No, that's not appropriate. But be careful. But Social Security filing can make a very big difference in them qualifying with a residual income shortfall. Has anybody reduced family size? Anybody originated a loan for Archie Bunker and Edith, and Meathead was still living in the house? There are 2 options to reduce family size. Meathead, hit the bricks, right? Go find your own place because we have a family of 4 now and we need to go down to 3 or 2. So you can reduce family size by one person or two people leaving, or you can document that they can hold their own financially. They have to be assessed one at a time, but you can reduce household family size from 4 down to 1, and what a big difference that makes in your residual income requirements, doesn't it? All right, and then lastly, this one might be a little controversial, so I had to talk to TMAC before this one. Now, if we have $100,000 in a 401k, what do we discount that for calculating residual income? 15%, right? Are there any other options? If you read the regs, it doesn't say 15%, does it? It says the lesser of their actual tax rate or 15%. A little known secret. Anybody writing that one down? Yeah, so I didn't get permission from TMAC's underwriters to tell you that, but there is a loophole, and underwriters generally don't want to go down that path because then they need their most recent tax returns. It's just 1 year. Just 1 year. And if they don't have to file taxes, guess what the discount rate is? 0. You have a $100,000 asset and you don't have to drop that down to $85,000 for calculating income? Brilliant, right? Now, there's not many lenders doing that, but if you get in a bind, yeah, pull that one out of your back pocket, right? Because if you have $1 million in a 401k or IRA, generally that's not going to be a problem anyway, discounting at 15%. But if you get in a bind, hey, what did you pay in taxes last year? I didn't pay anything because I didn't draw any money. Interesting, right? Question?
Is that state and federal?
Yes. Yeah. So they're looking at your federal tax returns, but I don't know if an underwriter is going to take a look at that at all. That may be a good question for TMAC's underwriters to see what kind of tax returns they're going to want to look at. But from my understanding, it's federal. All right, good stuff. Let's move on. So you guys already had the introduction to the books. Guys, thanks for the support over the years. You guys are the most committed to reverse mortgage education in the space. Understanding Reverse is in its 10th year. Can you believe that? That's just crazy. And you guys actually help make it better. Every year, people step up and say, hey, Dan, actually, I say that a little cleaner than you do. Great. If you can improve the text, you get free books the next year. So I don't know, some of you may be in this crowd. Just let me know if you contributed for the 2024. I have some notes. I think there's probably 5 or 6 people getting free copies. The 2024 edition has a new chapter on HECM versus HELOC, which I think you're going to really like. Because HELOCs are dangerous at that age. They're dangerous. Do not put somebody in a HELOC. Also, every regulation in Understanding Reverse is now tied to the 4000.1, not mortgagee letters, not the Code of Federal Regulation. If I could help it, I pushed all the regulations to the 4000.1, which means it's updated language, it's updated reference. And then again, thanks for the support with Navigating Reverse. You guys have the only glossy editions of Navigating Reverse ever printed. It's actually a matte finish, so Amazon actually has multiple printers, and I was surprised, but I love the glossy, right? It looks good. So thanks, guys, for the support. I know a lot of you already use Rapid Reverse. If you don't, there have been some enhancements over the last year. We use a lender margin, not the expected rate. I know on this slide it actually shows the expected rate. It defaults to 2.5. You can drop it down to 1.5. You can go up to 3.5. But it's a slider that defaults to 2.5. And it actually has live rates. So every Friday evening, I go in and I update the rates so that the next time you open the app, it's actual rates that will be available the next Tuesday. So just know that this will be accurate for Tuesday when you open it up on Saturday morning. I know we're going to handle some questions later, but guys, thanks for the invite. I always love coming to San Diego. This is one of my favorite places to visit. I will turn it over to the next speaker.